Excellent. So just keep an eye on the time and as the attendees join us.
Sure. Is anyone with us yet?
No, not yet.
Okay.
I've got it open. Oh, I think we do have one attendee. Welcome, Jan MacAuley.
Welcome, John.
I think I should learn how to hum or something if we're going to have a little bit of dead air time here.
Yeah.
Keith is just checking in to make sure we're good.
Awesome. So you got the new presentation that I sent this morning, right, Audrey?
Yes, it's titled March 9th.
Yes, thank you. Yep, and you're right, it is.
Well, just 3 minutes to go.
Great.
$11:58. We've got a couple more people that have joined us. We're just going to wait about 2 minutes and we will be online with our presentation. Thank you all for your patience this morning.
Welcome, everyone.
Another question just occurred to me, Jan. Maybe we can save it for the end once we get the session started, but how tax season affects your applications with the bank. So that's
Right.
perhaps something we can save and put in the chat.
Awesome. That's a good one. Thank you.
So we're at 11:59, another moment, and we'll get started. So we're right at the noon time. Good morning and welcome, everyone. My name is Audrey Wombolt, and together with Pam McFarlane, we are your GBBA events team. Today's lunchtime webinar is proudly sponsored by our corporate sponsor, the law offices of Boyne Clark, and Zoom sponsored by Keith McKay with Sendo Cards. Sendo Cards makes going to the mailbox fun again. Thank you to both of our sponsors. And now, without any further ado, I'd like to introduce today's guest speaker and GBBA Director, Jan MacAuley. During her day job, Jan is busy as a small business banking advisor with Scotiabank Burnside. This makes her perfectly poised to handle this particular topic, how to get funded for business growth. And in today's volatile economic environment, every nugget of advice can be gold for your business. Thank you so much and welcome, Jan. I'll now turn it over to you.
Wow, Audrey, thank you very much for that very pleasant introduction. I really appreciate it. I'm so proud to be a member of the GBBA, and certainly any value we can provide our members is a good thing. So thank you for the opportunity to do that. Getting your business funded for growth. So this presentation was developed in response and to position businesses in the Burnside Business Park for a period of growth, sustained growth after the pandemic. So there is definitely an appetite for lending from the banks because actually we're positioned to see, or we have been positioned to see over a 6% rate of growth over the next 3 years, which is significant after the last 2. So the idea behind this presentation is that when I look at financial statements and assess lending opportunities, there seems to be a lot of I would say a lack of knowledge around why banks ask for financial statements and what specifically they are looking at. And by arming businesses with this information, they'll be able to know before they even come to the bank where their applications may need to be strengthened. And also when they're working with their accountant with how to structure their business finances and their balance sheets and everything else, how applying for growth in the future can impact how you present that information for tax purposes. So there's lots of reasons why businesses would want to know. I think that businesses would want to know what banks specifically look at. And I hope that the people who are joining us find this information helpful. So I want to make clear that yes, I'm with Scotiabank and I'm an advisor at the Burnside Business branch, that these are ratios and financial indicators that are looked at from all the banks. All the banks have the same ratios that they look at. So giving you a little bit of nugget there, but it's certainly not Scotiabank specific. So Audrey, if we can just move on to agenda. Awesome, thank you. So how banks can help you grow. We're going to review that, and then we're going to get into the kind of the nitty gritty and the numbers, measures of financials of strength in your financial statements, like the specific ratios and line items that we look at in financial statements. And hopefully everyone got the last minute request to have your financial statements on hand. That will help make the presentation a little more, I guess you'll be able to use those as you walk along, make them a little more relevant as we're going through here, but certainly opportunities to do that exist in the future. So then the importance of the rest of the story. So yes, banks look at the numbers, but they also look at the rest of the story. Certainly given what industry you're in, what business life cycle you're in, the importance of that business plan can come to play either as absolutely essential or a nice to have with regard to how businesses assess credit, or yes, assess applications for credit, and then provide just a few online resources that Scotiabank has available on their online platforms that's available for everyone. Okay, so yes, lending support for business growth. So this falls in line with how banks can help you grow. So lending support comes in different forms. It can come in the revolving credit, which includes credit cards, credit lines, and overdrafts. And revolving means that it's fluctuating all the time. So banks can support by providing a business credit card that allows businesses to streamline their expenses and take care of everyday expenses while generating either cashback or points while they do that for their business. Real estate lending, that's not a typo, that's bigger. This is something that I'm really excited about. Scotiabank does have new offerings for real estate lending in the form of you can use your current existing held real estate, either commercial or residential, to fund global limits for your business. So if you need a significant line of credit for your business, you can fund that through your real estate holdings. Also, we do have for our business owners that look at income property, either owning their own location or part of their own location or wanting to own a separate location. We actually have some amazing new income lending opportunities and programs as well. So that's how we can support businesses, as well as term loan financing, which is for tangibles, for purchasing equipment, for purchasing vehicles, for purchasing different tangibles that have a worth. Really, it's if you think of something that you could sell. We provide term loans for, and for new startups, just government-backed term loans as well, just throwing that out there. So that's how a snapshot of how banks can support businesses in their growth and getting the access they need to the funds they need to actually grow their businesses. So moving forward, so measures of financial strength. So banks look at 3 areas of financial strength when they look at financial statements. They want to look at liquidity. They want to look at the affordability of the business to actually take on extra debt. And they want to look at leverage. They want to see how much debt businesses actually already have. So they want to look at how much in terms of assets does a business have at its disposal to run their business, how much flex and liquidity they have in their business, if they can afford extra debt, and if they, what kind of debt load they're carrying now. So that's really the 3 things, the 3 measures of strength that banks are looking for. So we'll just move on. Awesome, Audrey, thank you. So liquidity. So liquidity is the most important determinant of whether credit will be granted. The lack of readily available assets is the #1 reason for declines in business credit applications. So liquidity is measured by working capital and the current ratio. So you find these items, these line items, on your balance sheet. So working capital is your current assets minus your current liabilities. So where you see on your statements, on your balance sheet, current assets, take that number minus your current liabilities. And that is your working capital. And in terms of a ratio that the bank looks at, the current ratio is current assets over current liabilities. And the banks are looking for a benchmark of 1.2. So what that means is that a business has $1.20 in asset for every $1 of debt, at least. So that's the measure of liquidity that we look at on the balance sheet. Yeah, moving forward to affordability. Thanks, Audrey. So affordability measures whether the business can comfortably service additional debt given current obligations. So this is referenced by the debt service coverage ratio, and the where you find the information for this is on your income statement or your profit and loss statement. And the debt service coverage ratio is EBITDA, which I can provide what that is, over interest expense plus current portion of long-term debt. You can also look that up online. And the benchmark for that ratio is 1.25. So the bank is looking that for every $1 in payments, that like for fixed payments, like for debt, for currently serviced lending, say you bought a truck and you have a loan payment, that wouldn't be included in that ratio. So for every $1 in payments, there's at least $1.25 in earnings. Okay. So leverage. So leverage measures to what extent operations are supported by debt as opposed to equity. So high leverage is the second most common reason for decline. So this is where we may see a lot of lending from shareholders to the company, although there's explanations for that, and sometimes, but a business that owes more than it owns is not going to show well on the leverage measure. And how we measure leverage is the debt to equity, and we find these measures on the balance sheet. And you're looking for total liabilities over shareholders' equity. So those two values that you find on your balance sheet. So you just take your total liabilities and divide that by the shareholders' equity. And the benchmark the bank is looking for in that regard is 2.5. So for every dollar in equity, so every dollar that is owned in actually owned by the company, there's no more than $2.50 in debt. Okay. So as I mentioned, okay, perfect. So as I mentioned, these measures are looked at by all the banks. And so even though the ratios are the same, a good advisor will make all the difference to your lending application. So when you're thinking about if you have a good advisor, you want an advisor that will review your statements and provide direction what needs to improve. So that will do a preview so you don't get dragged through a lending process with a no at the end that could have been articulated sooner. And also provides good advice on how to actually improve where you're shy or where things look a little weak. And if there is a way that those statements can be restructured in order to actually improve the ratios and thus improve the attractiveness of the bank for lending. And again, to do that, often that takes coordination with your accountant to say, hey, you know what, and including the accountant in that lending discussion to say, we're looking at getting lending, this ratio is a little off. Can you provide a little bit more information about these line items to see if we can present the information in a different way that doesn't impact have any tax implications or negative tax implications. And a good advisor will be your advocate, will work hard. I mean, the person that your advisor that you see is actually your advocate to the rest of the bank. They're the ones that tell the story about why banks should lend to you. And if the ratios do require some explanation, a good advisor will put that extra time in to overcome any concerns that the adjudicators have. So moving forward from that, thank you. Although, like I said, all banks look at these same ratios. The Scotia Advice Plan for Business, we can do a quick and dirty on the numbers and get you those ratios right away. So you shouldn't have to wait forever once you provide your financial statements to see how it looks at a glance. To save you time and frustration in the lending process. And I can certainly share this information directly to the people who are on the call if it's useful and for further reference. We'll just move on from that, Audrey. Great. So moving on from the numbers. So again, as I mentioned, the rest of the story that comes through on a business plan. Any credit application will be improved by a good business plan, even a basic business plan. Sometimes this is not evident with small businesses, and it really can make the difference because it shows and it speaks to management that they're following a plan, and it allows the bank to see what that plan is and to give them confidence. So a well-organized business plan, or the rest of the story besides the numbers, demonstrates good management, obviously good planning, and gives your advisor what they need to get you what you need. Because if you've provided good information to them about what you plan on doing, they don't have to reinvent the story about why the bank should lend to you. So absolutely essential in startups, but any business and any lending application, your advisor will be very impressed if you hand over a business plan. Just move on from that. So Scotiabank does have a business plan writer that walks you through. It's pretty slick. It's right on the Scotiabank main website for small business. And it actually just walks you through and you input it as you go along, and it's not very glitchy at all. And then at the end of it, it spits you out a business plan. And it can be just as simple as that. There's many different plan templates out there, but this one's right here, walks you through, and certainly gives you what you need, and gives you a forum to be able to tell your story to your advisor. All right, we'll move on from that. So online resources, as I mentioned, the Scotiabank website, there's a link, and I can send out this this presentation if that's useful, and that will be provided, but just a little bit more about online resources. So the Scotiabank Business Plan Writer, as I talked about, you get different articles, different ways to do projective planning, different marketing suggestions on different topics like starting a business, growing a business, increasing profits, raising financing, selling your business. So good advice on all fronts. Just want to point that out there, that that's also there. And really, that's the end of the information session. If there's any questions, I'm certainly happy to answer them. Audrey, I guess I'll turn that over to you.
Yes, thank you, Jen. I do have a question for you. With rising interest rates, the Canadian government is talking about increasing the benchmark rates a few times this year. How is that going to affect debt servicing for small businesses?
Right. So just in the last 2 weeks, obviously, we've hit a new reality in the world, and some significant financial impacts. So the important thing to remember is that interest rates are at record lows, and we are seeing an input or an uptick. Yes, we just saw a recent one, and we may see more. However, banks still want to lend money. So while small businesses may pay a little bit more in terms of their debt, they pay a little bit more for their debt, there's still going to be an appetite out there for lending. And so I guess, and then it's about having an advisor that because interest rates on the other side allows for greater opportunities on the investment side. So it's good to have an advisor that can also talk about how you can offset any increase in your debt spending, and actually offset that by some more prudent investments on the investment side.
Excellent advice. Thank you so much, Jan. What terrific advice today for all small business owners. I think that what most resonated with me is how much real estate now plays such an enormous role in the lending, because our property values have significantly increased. So for businesses that have real estate holdings, perhaps it's time for them to come into their local Scotiabank or see Jan MacAuley and talk to her about how that can play a role in their business funding and for future growth opportunities.
Amazing. Thank you, Audrey. I really appreciate that. And yes, that's exactly why the programs were developed. So thank you.
So I'd like to take this time to thank you, Jan, and to let you all know what the GBBA has been up to in this past month. Next on our agenda is an in-person lunch event scheduled for Thursday, March the 31st at the Best Western Hotel on Spectacle Lake Drive. Mathieu Millet with Altus Group will be discussing HRM's proposed tax reform and what that means for our Burnside businesses. It wasn't good this year if they go with the rezoning as they're discussing. Please register online at greaterburnside.com for this event. Also, we hope to present another Brews and Chews After Work Social, leading us right into April as Environmental Awareness Month. We're busy on what's shaping up to be a mini trade show highlighting some of the most innovative businesses in the park when it comes to reducing, reusing, and recycling. More on both of these great events in the coming days. Thank you again to all who participated today. And as we move forward with the Business Improvement District for Burnside, we are looking towards building a better Burnside for all. For any information on this GBBA-led initiative, or if you're just looking for a place to hang your hat and volunteer, please reach out to any of our directors or contact us online again at greaterburnside.com. Thank you, and I look forward to seeing you all again in the very near future. Stay well, be safe, be happy, and we look forward to more prosperity in the park. Thank you, folks, and have a great day. Bye for now.
Thank you.
Bye.